Hey, stop your investment in car stocks right now. Here's why it's a bad idea to invest now in car stock. Simple 4 examples will prove my point. Today, we're diving into the automotive industry to talk about why it might not be the best time to invest in car manufacturers, especially in the short to mid-term. In the last few weeks, we've seen major car brands like Volkswagen, Nissan, BMW, and Mercedes-Benz all facing serious challenges, from massive layoffs and production cuts to slumping sales in key markets. These issues are weighing heavily on their stock prices, and it doesn't look like things will improve anytime soon. So, if you're thinking about investing in car stocks, I'd advise you to think twice, at least for now. Let's break down what's going on with each of these companies. Let's start with Volkswagen, one of Europe's biggest automakers. They've been hit hard by rising energy costs, stiff competition from Asian automakers, and a slower than expected transition to electric vehicles. In response, Volkswagen is planning major cost cuts, including the closure of at least 3 plants in Germany and layoffs that could impact tens of thousands of workers. The company's shares have already dropped by about 1%, and analysts are concerned that these deep cuts will be necessary for the company to stay afloat in an increasingly competitive market. With weakening demand in Europe and China, along with the pressure of transitioning to EVs, it's clear that Volkswagen's path forward is going to be bumpy. Next up, Nissan. The Japanese automaker is also facing a rough road ahead. They've announced plans to cut 9,000 jobs, about 6.7% of their global workforce, and reduce their global production capacity by 20%. The reason? Weak sales in China and the US, along with a failure to adapt quickly enough to the growing demand for hybrid vehicles. Particularly in the US, Nissan has slashed its profit forecast by 70%, and it's clear that they are struggling to keep up with more competitive automakers, especially in markets like China, where local brands are eating up market share with more affordable, tech-savvy EVs. This combination of weak sales and high restructuring costs makes Nissan an unattractive option for investors right now. BMW is no stranger to challenges either. In fact, the company just reported a 61% drop in its third-quarter profit, largely due to weak sales in China and ongoing technical issues, including problems with its braking systems. This led to a significant drop in their share price, nearly 5%. And investors are getting worried. The slowdown in China has been particularly damaging, as it's one of BMW's biggest markets. Plus, their inability to meet demand for hybrids in the US is costing them valuable market share. BMW has also lowered its full-year profit outlook, and with these continuing issues, it's hard to see a quick rebound. And then we have Mercedes-Benz. This German luxury brand also took a hit, with shares falling by almost 7% after the company slashed its earnings forecast for the year. The primary culprit? Weak sales in China, which have been further exacerbated by the economic slowdown there. And it's not just China, sales in Europe are slowing down as well, which is adding more pressure. Mercedes-Benz revised its profit guidance, expecting its return on sales to fall to between 7.5% and 8.5%, a far cry from the earlier forecast of 10% to 11%. With both European and Chinese markets showing signs of weakness, Mercedes-Benz is facing a tough road ahead. So what does all of this mean for investors? Volkswagen, Nissan, BMW, and Mercedes-Benz are all facing significant headwinds right now. Whether it's cost-cutting measures, restructuring, weak sales in critical markets, or technical issues. While these companies are major players in the automotive world, the challenges they're facing right now make it risky to invest in their stocks in the short to mid-term. If you're looking to invest in the automotive sector, it might be wise to wait for a clearer sign of recovery. Right now, it seems like the road ahead is filled with obstacles. Thanks for watching, and remember to like and subscribe for more investment insights.